We're getting close to the holiday season. If you're wondering how that's affecting the Orange County housing market update, this is going to be for you. We're talking about right now the October housing market update. So I'm going to go through a new style. So you've been following along these videos. I'm going to share my screen here and walk through real life data from the MLS. If you're not familiar with who I am, my name is Christian Stubbs, owner and team leader of Onyx Homes. We're a real estate sales team that's helped over 800 people move all over Southern California just since year 2020. And now, I make these videos and this channel all about Orange County just so that we can help you make your next move a little bit easier so you can make better decisions. Now, I'm going to go through several different categories. We're going to go through new listings, active listings, closed sales, days on market, price, and interest rates. I'm going to show data for each one of these. So this is not theory. I'm going to give you overall median and average real data from the housing market, and then I'll give you context from the thousands of conversations that we have with this prospective buyers and sellers, maybe even yourself. So let's go ahead and dive in. So this chart I'm going to show you, I'm going to go back and forth a couple different things, but I'll explain what we're looking at here. So this particular chart is basically 1 year. So all the way back to January of 24, how many new listings came to the market, meaning how many signs were put in the yard in that month. So last month we had 2,095, which was a big drop off over the last couple of months. Over here, you can see that we are at, this is year over year, we're at 9.3. So fewer listings came to the market. And as you can see, we're at September, so this is last month's data. We see a huge dip towards the end of the year. I think we're going to see exactly the same thing happen this year because the market's moving so slow, which we'll get to. So number of new listings trending downwards, but that's not really abnormal, okay? Next thing we're gonna look at is total available listings. So this is how many listings are available on the market for you to shop for right now. This was going straight up like a rocket ship for the first half of the year. Once we hit July, it is starting to taper down, which is earlier in the year than normal, but it went up faster and it looks like it's already declining faster as well too. So we have seen almost 800-ish homes come off of the market since the peak that we saw here in July. Now I want to give a zoom out, right? Because this looks like, oh my gosh, we are at 12% more, which that's not really that much, but this looks like there's way more listings on the market. Let's zoom out to 3 years. Okay, so this right here is when interest rates, July of 2022, this is when interest rates went from like 4 to 8% almost overnight. We just saw way more inventory hit the market. So if I zoom out for 5 years, we go back to May, which is pandemic numbers. We had 6,500 homes on the market at the peak of freakout. And then we went all the way down here and had really, really low numbers. But if I zoom all the way out to max, you can see that in 2008, with the real housing market, like housing financial crisis, there were 19,000 homes on the market in Orange County. So we're nowhere near that. It's really, really low still. And a normal, healthy Orange County market has between 6,000 and 8,000 homes on the market, as you can kind of see here as a normal market. But ever since COVID, the market is just finally starting to recover on inventory. So if you zoom back into a year, yeah, inventory is definitely up. It is up significantly, which is good. It's needed to go in this direction. So that's active inventory. Closed sales. This is pretty flat. We're actually up over last year. Last year also was really, really high as well too. Let me smooth this out for us. So as you can see, in July of 21, everybody in the entire world wanted to move. And right now, the last couple of years, we've had super low demand, almost as low as back in 2008. Normal years will have something like 30-ish thousand transactions happen. And right now we're seeing 20,000. So we're seeing about 30% fewer transactions than a normal, healthy market. All right, now let's go to, so right now we're climbing back up and homes are taking longer to sell. The median is 22, the average is 38 days on market. Last year, the peak that we got to at the end of the holiday season was 40. We will likely surpass that this year as we're already at 38 here in September, meaning that it is taking longer for homes to go under contract. Huge caveat to this, don't take this number as a reference to your listing. If you're thinking about selling your house right now, or if you're looking at listings like, oh, it's 38 days on market, it's gonna go into contract any day, or if it hasn't, it's overpriced or whatever. This is average and median for the whole county. you need to look for your individual price point, because we're seeing some price points where it's 6 months on market is the average. We're seeing some where it's 2 weeks on average. It very much depends on the segment of the market that you're looking in, which is where your expert agent should come in to help. Now, by the way, if you want help with that, one, I made this is our home buyer negotiation blueprint. This is how we can make your offer look irresistible to the seller without you paying the most money possible. And if you're a seller, this isn't a bad idea to learn how we get better deals for our buyers. So basically what this does is I broke down the home buying process into 4 different chunks: research, preparation, how to write offers, how to write the best possible offer without just paying the most money and get it accepted, and then what in the heck actually happens in escrow. So when I first made this, I wrote it out as 126 pages. This is obviously not that long. This is the most digestible version for you to go ahead and look through. Now, if you want to download this, the link is in the description below. But if you want to book a call to talk about the full thing, like all the things we do for our clients, on the next page, you can book a buyer strategy session with one of our agents. And if you're already working with one of our agents, your agent will be notified. Do this. This is the best possible thing we can do for you as a buyer. And if you're a seller and buying, this is a great place to start as well too. Anyway, let's get back to the video. All right, now one of the arguably most important things we're going to talk about is sales price. So normally on the back half of the year, we just see prices go up in the first half and then down in the second half. Last year was a little odd year where it was pretty flat in the winter. This year we were pretty flat, and then we spiked up to a high point of 1.23, and then we got down to 1.62, and we actually went up last month. So never do we see the month of August to September prices increasing. The reason we did is because rates ticked down quite significantly. So buyer affordability increased. So between prices coming down about $70,000 median and rates coming down almost 0.75%, or at least 0.5%, that added a massive amount of affordability. And hopefully you were watching our videos and you knew about that, and if you didn't, make sure you like this video and subscribe to the channel, because that's what we talk about is, hey, this is what we're talking about. We had a ton of clients take advantage of this dip in the market and save a lot of money, and prices going back up really wasn't surprising. Now, I do think they're going to taper back down through the rest of the year, but we'll see. So that's what prices have done right now. And again, if we zoom out, let's look 3 years from now, and this is month over month pricing. As you can see, January prices go up, halfway through the year they start going down. December they hit the low, they go back up. They get to the end of the year, they go back down, they go back up, they go back, right? Like every single year. And if we look at the last 5 years, as you can see, yes, there's obviously volatility in the market, but the farther you zoom out, the smoother it gets that prices go up over time. And I think this is an amazing point to mention this. We've talked about the 2008 housing crash. The last person who bought at the worst possible time ever in the history of the housing market bought in April of 2008, when home prices in Orange County were $499,000, and then their house just a few months later was worth $355,000 at the bottom. And then if they were able to hold on to it, which is a big caveat, and a lot of people weren't, but let's say they were able to hold on to it, that same house now is worth $1.2 million, roughly. And they've been paying a mortgage for 17 years or whatever it is. I can't do math, but whatever that math is, they have principal pay down, they have tax they obviously have tons of appreciation. Their home has, 2.5x in value since the peak of the market. So timing the market, even if you had the best timing ever and you bought at the bottom of 2009 and you just held on to it, like, who cares about that $150,000? Is that a lot of money? Yes. But what is more important is the $1 million that it increased in value, or the whatever the math is, the 2x there. It's such a null point. And at any point, like, somebody bought at the bottom here in October of 2023, and then prices went up to 1-to-1, right? And then they went up to 1. So like, even this person here who bought at the peak of 2022 numbers at $1,060,000, they probably felt pretty bad when prices got down to 920. But then fast forward another 6 months to a year later, they're right back up. So this happens all the time, and I'm speaking specifically to the buyer who's trying to time the market. Good luck. Other than January through June, prices go up. June through December, prices go down. That's these little humps on this chart. I hope that's helpful. I just wanted to share that. And as far as interest rates, I always go to Mortgage News Daily. This is what I look at for interest rates. and you can just take a quick glance. This is not going to be the rate if you locked right now. Like, there's a million other variables. This will just give you a pretty good idea. Rates have come down quite a bit over the last couple of weeks, months, and this makes things more affordable. So overall summary for the housing market, there's really two different markets that are going on. If you've been following along, we've been saying this all year long, is the houses that look good, that are priced right, that are marketed well, they still sell fast. And if you miss any of those three as a seller, if it looks bad relative to price, if it's priced bad relative to how it looks, and if it's marketed poorly, it's not going to sell, period. You have to hit all three of those nails on the head, or you will get zero traction to the listing, and obviously it won't sell if you have zero traction. If you hit all those things on the head, you will likely get below your median days on market for your price segment. Whether your price segment's really, really high end or entry level, regardless, it's all relative, which is why you have to talk to a real estate professional, because the reality is the online estimates have no idea what they're talking about. So I hope this was helpful. If you want to download the home buyer negotiation blueprint, the link is going to be in the description below. If you want to go to onyxhomes.com and learn more about our company, go for it. Otherwise, I've got this next video that I think you'll find valuable. Again, thanks for watching. I'll see you in the next one.